I would say the biggest headline among all of the panels yesterday was trade. Trade was very much in focus. It was a recurring theme through a lot of the sessions, most of the sessions yesterday. Kicking things off with Larry Kudlow, who heads the White House Economic Council. He said that he believes world trade is broken. Kudlow says he does not believe the Chinese president, Xi Jinping, has any intention of following through on their previous discussions.
And so far as we know, President Xi at the moment does not wish to make a deal. Now, I'd love to be wrong on that. We are waiting for him. The ball is in his court. And the tit-for-tat business, which is nobody's favorite path, but nonetheless, they can end that this afternoon by providing a more satisfactory approach and essentially, Jimmy, doing what the rest of the world knows needs to be done.
Kudlow added that they're looking for China to bring tariffs and other trade barriers down, get rid of IP theft, things like that. Overnight, China's foreign ministry spokesperson said that Kudlow had, quote, unexpectedly distorted the facts and made bogus accusations that were, quote, shocking and beyond imagination. But guys, for what it's worth, the hedge fund managers and private equity managers who spoke yesterday seemed optimistic that some sort of trade deal would be reached in the longer run. And they were urging investors in the audience not to trade on, do market trading on the various news and headlines of the day, which seems like the market really hasn't been reacting to.
That's what I would guess, too. For the most part, the market has set things aside. We just spoke with Commerce Secretary Wilbur Ross. Joe was on the White House lawn with him. He said he thinks a year from now the situation will be different. I pushed him a little. He said he thinks it'll be better, that we won't have all these tariffs that are out there. But hard to say when you don't know what the other guy's thinking. And
Mary Erdos made a really interesting comment yesterday from JP Morgan where she talked about how, the current market structure and the increasing complexities that we're seeing and the interconnectedness on a global scale in the markets, we haven't ever been in a situation where we've had a trade war and had, a market institutionalization like we have right now. And it's been 50 years since we've had a trade war. So from a modeling standpoint, it's very, very difficult for investors to even do that and to think one step, two steps ahead. And so I think that's partially why they're urging investors, just kind of ignore the big headlines and focus on the long run.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.